Hey guys, what's up? Welcome to this channel. In today's video, I'm going to be sharing with you a setup that I traded today, and I'm going to be using this opportunity to talk about how to use a Fibonacci in the bearish market condition. The last video I talked about how to use it in the bullish market condition, but if you're yet to watch that video, you can check our channel or check in the description below. I'm going to be leaving the link there where you can gain access to the video. So let's dive right in. Like we all know, no market trends forever. There are bound to be retracements in the market. The market moves in a zigzag formula. So if you're familiar with the chart, you're supposed to know that the market doesn't trend bearish always. There's bound to be retracement, and that retracement is just to collect more orders in the market. So you can easily gain an opportunity to get involved when you understand that the market is actually in the retracement zone. But there are certain levels where the market come to, and you're expected to look for opportunity to sell in the bearish market. So that's where Fibonacci retracement comes in. Now, to get the Fibonacci, you can easily click here, get the tool here. Now, to draw it, like the last video I told you about the bullish, you can either use the 0 to 100 in the bullish, but when it comes to the bearish is 100 to a 0. So you place it on the last swing high. So I'm going to share with you when the market pulled to this point here, and we considered weeks when we're using the Fibonacci retracement. So there are some levels in the Forex market when you use a Fibonacci that are always called flip zones. Now we have the 100, the 61.8, the 50 flip zone, 38.2 flip zone, 23.6 flip zone. Now the 61.8 flip zone is known as a good ratio. 38.2 is known as a very strong trending retracement market. So whenever your market comes to that 38.2, it shows that the market is going to pull back and start going down even lower than the previous swing low that you saw before you pulled your Fibonacci tool. So for this video, I'm going to be showing you what I traded. Now I'm going to put this point here and take it to this last zone. Let me point this out with this. So this is the stuff I was talking about. So what happened here? The market got to the zone, here, and retraced back up right here. Now what happened? Let's go down to the lower time frame. It was an opportunity to enter the market because the market got to the 23.6 flip zone. Or let's check it out in lower time frame. 15 minutes. See, we got a bearish engulfing here. And check the 5 minutes. What did you see in the 5 minutes? We got a head and a shoulder pattern here to get involved in the chart. So there was also an entry trigger for us here, which happens to be a shooting star here, right here, So I entered the market here and ride it down all the way to the downside. Now there's something the Fibonacci works with, and that's the trend line. Now this trend line, whenever there's a break in the trend line, it tells you that the market's about to go in an opposite direction, but though not immediately. So it is better safe that you get out of the chart as at that zone. So let's take this Fibonacci off. So if we draw a trend line here, you see something happened. There was a trend line break. See? So let's go to the lower time frame and see what happened. The trend line was broken. So this Fibonacci tool is actually tells you what's happening in the market for you to potentially get what entries and ride the market to the downside. Now I always love to enter the market in a 61.8 fib zone, because though it's hard to come by, most times, but that's always a good ratio. So I'm looking out for this market to see what happens and see the zone is going to be pulling back to. Right now the market is currently at, get this out, it's currently at 38.2 fib zone, which I'm not sure is the zone for it to what retrace. It's definitely going to come back to the 61.8 right here. Yeah, I'm expecting the market to come to the 61.8 fib zone before what riding it all the way to the downside. Because why I'm confident about that is because I've not gotten a market structure change indicator. Now my market structure change indicator, that is my reason for trading, it happens to be a change in market structure. Now the reason I got involved in this chart was because I saw something like this. I saw a head and a shoulder pattern here, which gave me a boost. Sorry, let me take this out. So this was it. So this point here, that was my entry right here. That was my entry that I took at first before I waited for this to happen. The reason I entered here was because my strategy played out. Let me take it to the down time frame. What I got here was what? I got a shooting star here. So that was an opportunity for me to ride the market. So I entered the market here, and then the market retraced back here again for me to get another entry. So it kept happening. I always say the trend is your friend. Always stick with the trend because you get more opportunities trading with that zone. Now there are zones that also use as exit for the Fibonacci, and these zones happen to be happens to be the 0.0, 23.6 also, and 61.8 in an uptrend. The 61.8 in an uptrend is used as an exit, while for the bearish 0.0 is used as an exit, or 23.6 is used as an exit in the market. Now Fibonacci works with trend line trading, so you want to always draw your trend line. And make sure whenever the trend is broken, you want to look for a way to get out of that trade. In a future video, I'm going to be talking about how to exit a trade properly. You don't just patiently wait on the market and wait for it to work out for you to get a trade, and on the long run you just exit the market just anyhow. You want to be sure that your exit is sure. That have a way of boosting your confidence. It has a way of boosting your confidence. So I think that's all for the Fibonacci. And one beautiful aspect of Fibonacci tree is that it creates confidence, knowing that the market would always retrace. So you don't want to be in a hurry to get involved in the chart immediately. You don't want to get involved in the charts. Like we said, all you want to do is make sure your strategy is right. What happened here? And don't forget what I said earlier. This swing low and this swing high. So where did the market retrace to? The market actually came to the 38.2 fib zone. See, can we see it here? It came to the 38.2 fib zone. So it's a good entry for you to get involved in the chart. And if we draw our trend Fibonacci retracement down again, the market came to a 50 pip zone, showing that the market continues to the downside. So what I'm going to be doing here is drawing our trend line. Let me use this as a trend line. And we got a break. We're exiting the trade from here. So Fibonacci works with trend lines, so you want to know that the trend is your friend and also get involved at the right time. So that was all about the video. In case you have a question you want to ask, you can leave it in the description in the comment section. I will give attention to it immediately I say it. Thank you.